Ladies and gentlemen, it's time for the John Truman Wolfe Financial Hour. Now, here's John Truman Wolfe.
Hello, America. This is John Truman Wolfe. This is the John Truman Wolfe Financial Hour, coming to you from the beautiful mountains north of Los Angeles in the Los Padres National Forest. It's gorgeous out here today. Just a spectacular fall day. I don't think we're officially in fall yet, but it's gorgeous. Hope things are nice where you are. We'll start the show here today as we do every week. Just a rundown of the financial stats for the day. The Dow 26,659 plus 139. For those of you that follow the Dow Jones, you know it's had a rough week. It's down a couple thousand points. And you get the sense that, we're being played with here in this 26 to 28,000 range on the Dow. It doesn't seem healthy to me at all. Anyway, it was up 139 today. Yesterday it was down almost 1,000 points, 950 something, if memory serves me. So there you go. We're going into Friday at 26,659. The S&P 3310 plus 39, and the Nasdaq 11,185, 181. All of them up a bit today, so some recovery. But just listening to the news there, one would be heartened. The economy increasing at 30 some odd percent. This is a stunning number. Moving to the precious metals, those of you that follow gold and silver, they have been hammered the last 3-4 days. From around, gold was hanging out around 1,900, up a little bit, down a little bit, but closed today 1,867, off $9.20. This is, almost 33 points below the 1,900 level. It seemed to be consolidating there at 1,900. And then yesterday it got hammered. Everything got hammered yesterday. The Dow got hammered, precious metals got hammered, and the cryptos got hammered. And we'll get into the cryptos in a second. Everything has recovered, but the precious metals. Silver's trading at 22.32 off 11 cents. That is, not dollars. So the precious metals look to me like a buying opportunity. You can go in and grab some, and I don't, I do not foresee further deterioration in these markets. 1867 for gold, 22.32 for silver. Nice buying opportunity. Over to the cryptos, all of them except Bitcoin were down yesterday. I mean, the screen was all red. Today, there was some improvement. Bitcoin 13,448, up 2.2%. Ethereum 385, up 0.25%. And Ripple 24.2, off just a little bit, 1.4%. So the cryptos are hanging out in the same general area they have been. We'll come back and talk about this in a little bit more depth right after this. You stay with us. I'm John Truman Wolfe. We'll be right back.
In this time of global uncertainty, you need sound financial information to keep your investments, your future, as safe as possible. The Strategic Financial Intelligence Newsletter, created by John Truman Wolfe, #1 best-selling author and renowned financial consultant to governments around the world, is your most valuable asset. A monthly goldmine of the vital insight and insider information you need to stay on top. Right now, financial security is critical. That's why, for a limited time, we're dropping our price from $249 annually to just just $99. That includes access to the entire Strategic Financial Intelligence archives, covering everything from precious metals, offshore banking, to cryptocurrencies, and the wildly heralded seminar on the covert agenda that has backed the U.S. dollar for at least 50 years, and more. Sign up now at strategicfinancialintelligence.com. That's strategicfinancialintelligence.com.
All right, folks, we're back. I'm John Truman Wolfe. This is the John Truman Wolfe Financial Hour. And I'm going to do something a little bit unusual in that I get a lot of email traffic, phone traffic, email traffic. I get a lot of traffic of folks that have read my book on the global financial crisis and are concerned about the health of their bank. The reason for that is I go into at some length the extent of derivatives on the planet. I've gone over this in the show before, but just by way of background, there are, folks, 1.2 quadrillion dollars worth of derivatives on the planet, and about, and I say on the planet, held by banks, primarily by banks, some insurance companies, and about 75% of those are securities called interest rate swaps. And not to get too confusing with a bunch of banker speak, these are nothing other than bets on the direction of interest rates. That's it. And so you've got banks, the major money center banks in the United States are pregnant with these things. There's about $227 trillion worth of derivatives held by the New York banks. By the New York banks, I mean B of A, Citibank, JP Morgan Chase, the big ones, Wells. And so I have encouraged readers and listeners, if they have accounts with one of those big banks, to move to a smaller regional bank. It's a hassle changing bank accounts. Particularly this day and age. It used to be you walk into the bank, go to the new accounts department, open the account, and walk out. Now the whole, KYC, it's called, know your customer stuff, is very, it's detailed. Anyway, it's a hassle to change banks. I recommend it. Because these larger banks are really full of derivatives, and it is my opinion sooner or later somebody's going to stick a pin in the derivatives bubble. And once that happens, assuming it's going to happen, it's going to get nasty out there. After writing that book, I had a lot of people said, well, okay, good. If I have to move my bank, where am I going to move it? I did an assessment of strong banks in the country, wrote a book called The 27 Best Banks in America. But that wasn't enough banks, because I continued to get, feedback from people, is there a bank near me? So I did a very in-depth review of the financial statements of banks in the United States. I don't know how many bank financial statements I read, or at least the summaries thereof. And I wrote a follow-up book called The 99 Strongest Banks in America. And at least you get, roughly 100, actually there's, I think, 105 banks in that book, something like that. And pardon me, and that bank at least covers strong banks. That book covers strong banks across the country. But I still get calls, and I will research a bank's financial statement. I charge to do that because it takes a fair amount of time. But I wanted to give a little bit of education about how you might do that yourself. If you're concerned about the strength of your bank, I can give you a couple of things to look at, rather than call me. I don't mind the business. It's just there are certain things you can look at that kind of will either ease your mind or put you on an anti-anxiety drug, which I do not recommend. So what do you look at? A key factor for me is the bank's liquidity. What do I mean by that? I mean, how much of the bank's deposits are lent out in loans? And this is not a hard thing to figure out. You have to get the bank's financial statement. That's usually contained in the annual report. So if you bank with the Bank of Sussex, just go to a search engine and put an annual report for the Bank of Sussex, and you should get access to the annual report. The annual report is, it's an annual review of what the bank did. The bank puts the best spin on their data and what they've done. So it's a PR document, but it also has the bank's financial statement. And you don't have to be a CPA or a former banker, as in my case, to be able to at least get this data, this liquidity data. So you look in the top of the data, the financial data. You have to skim through the annual report to find the actual financial stats. But when you get to the balance sheet, you'll see at the top the assets. And, there's cash, there's investments, there's various other assets. But the key asset, the biggest asset, will be loans. That's an asset to the bank because they made the loan. You owe the money to the bank, and it's an asset. So you write down that figure. Let's take some just round numbers for the sake of example. Let's say the bank has got $70 billion in loans, or let's make it million. This is a big of a small bank. 70 million in loans. Okay. Then you go down to the section below that called liabilities. The financial statement's broken down into their assets, what they own, and the liabilities, what they owe. And you will see deposits. How much money's on deposit at the bank. So in our example here of the Bank of Sussex, let's say there's 100 million in deposits. So the loan to deposit ratio is 70%, right? 70% of the deposits have been lent out, and the loan to deposit ratio is 70%, which happens to be a good loan to deposit ratio, a safe loan to deposit ratio. It means that you've got 30% in some other assets and that hasn't been lent out. I use a rule of thumb, and I think many bankers do, but I can't speak for them. But I use a rule of thumb of 80. If it's below 80%, that's the liquidity is decent. The further down below the 80%, the stronger the bank's liquidity is. The higher above 80% means it's less liquid. And some of these banks are unbelievably illiquid. In some cases, they have lent out all of their depositors' money. Not a healthy circumstance at all. And some of these bank rating sites will rate them high even though their liquidity is low. I'll explain this in a little bit more detail when we come back. I'm John Truman Wolfe. This is the John Truman Wolfe Financial Hour. Stay with us.
Question: have you ever thought about making an investment in California real estate for the high returns available through trust deeds? As a trusted professional broker, Sun Pacific Mortgage and Real Estate has been helping investors earn high-yield returns on safer investments for over 32 years. Their trust deeds earn upwards of 13%. That's right, 13%. They invest in notes starting from $100,000 throughout all of California, where real estate remains strong. If you want to know more about high return investments through available deeds of trust, go to their website at sunpacificmortgage.com. That's sunpacificmortgage.com, or call them today at 707 523 2099. 707 523 2099. sunpacificmortgage.com, or call them at 707 523 2099.
When you really want Italian food, you have got to get to Columbo's. Columbo's Italian Steakhouse and Jazz Club, Colorado Boulevard, in the enchanted and alluring kingdom of Eagle Rock. It's that little neighborhood place you wish was down the street from you, seekers of good times and great grub. Your prayers have been answered. Columbo's has answered the clarion call by feeding the famished and quenching the insatiable thirst while overlooking Eagle Rock's version of Champs-Élysées, Colorado Boulevard. Yes, it's all there. Fabulous steak and delicious meaty provisions to soothe the savage beast. The finest offerings from the seven seas. Let's not forget Columbo's family Italian recipes, along with the world's greatest meatballs. Need I say more in these topsy-turvy times? It's crucial to your very existence that you savor some semblance of yum-yum by motoring over to Columbo's, that little neighborhood place you wish was down the street from you. Columbo's Mangia Bene.
Imagine this is your money and someone wants to take it from you. Who is it? The IRS. They want your money, and guess what? They can legally take it, all of it if they want. Remember, they sent you that letter that said, hey, you owe us a bunch of cash and we're going to take it from you. So what do? Fight back by letting our team of experts at the Tax Helpline work it out with the IRS so you can keep your money. And we're good at what we do. When you hire us, you get a team of guys on your side that know the IRS laws and will fight to save your money. So if you owe the IRS a ton of cash and you want to keep it, call right now and learn for free how we can help you put it back in your pocket.
800-932-1597. 800-932-1597. 800-932-1597. That's 800-932-1597.
And we are back, folks. I am John Truman Wolfe. This is John Truman Wolfe Financial Hour, talking before the break about how to determine the liquidity of your bank, which is one of the key indicators of safety. And as I was saying before the break, there are some bank rating sites which, often have good information, but there are times that they're jaw-dropping. I have seen these rating sites rate banks with 5 stars, their highest, when their loan-to-deposit ratio is 100%. In some cases, over 100%. How do you do that? Well, not only do you lend out all of the deposits, but they lend out some of their capital, or they go borrow money and lend that out. Really unhealthy. So that's one of the key things you can look at. Get your bank's annual report, go to the section on, finances, look at the balance sheet. In the asset section, see how much the loans are. Then go down below that to the liability section, see what the deposits are, and then you can see what the loan to deposit ratio is. What percentage of the deposits have been lent out. And as I say, there's no government mandated rule that it's got to be 80% or 85 or 75 or whatever. I'm just telling you, over the years, my experience as a banker and as a financial manager over the years, 80% is a good number. It understand that the bank has got to lend the money out if they're going to make interest income and have money for their shareholders, which is what banks are all about. So in other words, my point is they have to lend out X percent in order to generate income, because they're paying their depositors interest on the deposits. Now, these days, I don't know if you even call it interest. I mean, these days that figure is, it could go under a snake's belly. But in general, they have depositors. They pay the depositors a certain amount of money, and then they have to lend the money out at a much higher rate than they pay the depositors, and that's the bank's gross income and profit. And so take a look. Assets, get the loans, get the deposits, and you'll be able to see. It doesn't mean that if it's at 81 or 82%, you need to pack your bags and leave. But if you're well into the 90s, I mean, I've seen a lot of these banks that are rated well by these rating agencies, and their liquidity is very low. Loan to deposit ratio of maybe 95%. As I say, I saw not a lot, but some banks rated 5 stars, the highest rating, when they'd lent out every penny they have on deposit. It's like, wake up. That's not a good operating basis whatsoever. So that's just a little bit of instruction or education on that point if you're concerned about your bank or your bank's liquidity. The other point to look at, and this takes a little bit more digging, and in some cases the bank's annual reports make this data available, sometimes they don't, but you can check the loan loss reserves. Banks put money aside in an account. It's an expense. They put the money aside to cover non-performing loans or loans that go bad. There's usually a section in the annual report that will go through this. But if the bank has got, I'll just take an arbitrary figure, $1 million in non-performing loans, then you want to see how much is in the loan loss reserve. If, $500,000 is in the loan loss reserve, that means only half of the non-performing loans are covered by, reserves for that purpose. It should be at least 100%, and ideally higher than that. So if the bank has got $1 million in non-performing loans, there should be $1 million or more in the loan loss reserve account. And if you really want to dig into that and you can't find it on the annual report, call your bank officer if you're with a bank that enables you to contact the officers, and ask them what are the non-performing loans and how much is in the loan loss reserve. All right, we'll come back and put the final touches on that statistic when we come back. You stay with us. I'm John Truman Wolfe. We'll be right back.
Do you want to fly somewhere, anywhere in the world? Smart travelers call myflightsearch.com for the best deals on flight tickets. Going to Manila, Bangkok, London, how about Singapore? Call myflightsearch.com for the lowest flight tickets available. What about a local vacation? Let's say you want to fly to Vegas, Orlando, Miami, Los Angeles, or Denver. Pick up the phone and call myflightsearch.com right now. We have exclusive deals that you can't find anywhere else. The only way you can get these low airline prices is by calling us. We have so many low prices available, we can't possibly tell them to you right here and now. If you're flying somewhere anytime in the next 6 months and you want the lowest airline ticket prices anywhere, you owe it to yourself to save a ton of money. So pick up your cell phone and call myflightsearch.com right now.
Call 800-445-3166. 800-445-3166. That's 800-445-3166. Call now. 800-445-3166.
What are you going to do with your old car? You can try selling it, you could junk it, or you could donate it to Heritage for the Blind. Your car will be towed away for free, and your donation is tax deductible. Just call 1-800-785-9618. Heritage for the Blind accepts cars, vans, trucks, and boats. It doesn't matter if your vehicle runs or not. It will be towed away for free, and you'll be supporting those that need help. Heritage for the Blind is a nonprofit organization that helps the visually impaired live fuller lives. Call right now to donate your car, and as a special thank you for calling, you'll receive a free 3-day vacation voucher to many exciting locations. Call Heritage for the Blind right now, 1-800-785-9618. Donating is easy, and your vehicle is towed away for free. Plus, you'll get a free vacation voucher. Call now, 1-800-785-9618. That's 1-800-785-9618.
Tired of lockdown? Let the reconnect begin. You belong here. Welcome home to the magic of Angelo's and Vinci's Restaurante in Fullerton, California. Check out our new spacious outdoor dining al fresco. Romantic. Market lights. It looks like a movie set. Dine under the stars and enjoy our tasty Angelo's and Vinci's pizza, pasta, seafood, chicken, salad dinners, and more. In the cool of the evening, come enjoy our award-winning menu, new wine list, specialty cocktails like our Peach Bellini Martini, appetizers, and more. Angelo's and Vinci's now open every day from 4 p.m. to 9 p.m. for relaxing outdoor dining. No reservations needed. Just come on in for delicious Italian food. Angelo's and Vinci's Restaurante, 550 North Harbor Boulevard in Fullerton. Call 714-879-4022. We're going to need a lot of pasta to get through this year. Come to Angelo's and Vinci's at 550 North Harbor Boulevard in Fullerton today.
In this time of global uncertainty, you need sound financial information to keep your investments, your future, as safe as possible. The Strategic Financial Intelligence newsletter, created by John Truman Wolfe, #1 best-selling author and renowned financial consultant to governments around the world, is your most valuable asset. A monthly goldmine of the vital insight and insider information you need to stay on top. Right now, financial security is critical. That's why, for a limited time, we're dropping our price from $249 annually to just $99. That includes access to the entire Strategic Financial Intelligence archives, covering everything from precious metals, offshore banking, to cryptocurrencies, and the wildly heralded seminar on the covert agenda that has backed the U.S. dollar for at least 50 years, and more. Sign up now at strategicfinancialintelligence.com. That's strategicfinancialintelligence.com.
All right, folks, we're back. I'm John Truman Wolfe. This is the John Truman Wolfe Financial Hour. I've taken the first part of the show to educate folks on what to look for in your bank's financial statement if you have any attention on the bank's liquidity, the bank's strength. I talked just a bit earlier on determining the loan-to-deposit ratio, checking out what percentage of the bank's deposits are lent out. Ideally, that figure should be 80%, give or take. And then before the break, I was talking about the loan loss reserve account, which is the second thing you could check out. And if it's not in the annual report, you can just call the bank and ask them, what is the dollar amount of your non-performing loans? Banks always have non-performing loans. How much, and how much is in the loan loss reserve account? The bank person may or may not know that, but if it's your bank and they're service oriented, you can just say, you want to know, you want the answers to those questions. How many, what? You could either ask what percent. I wouldn't ask percent. I ask dollar amount of non-performing loans and how much is in your loan loss reserve account, which is the account set up to handle non-performing loans. So that's a little education. I went into that in some depth because I get a fair amount of traffic on, would you analyze my bank? And I do that. I repeat, but I charge for it because it takes time. That's a way you can do it yourself and not have to be, bothered paying me. Next, I want to talk about a kind of investment in gold that is becoming more and more prominent. It's not brand new, certainly, but it's an area of gold investing, that gold mining investing, that you may not be familiar with. And it's called gold royalty companies, or gold royalties. And the way this works is companies basically, act as bankers, for lack of a better word. So they'll find a gold miner. Maybe they've got a mining company, and they're, on their way. They've got indications that there's gold in a mine and that it's high quality, and they've run out of money. Mining for gold is an expensive proposition, a very expensive proposition. And if they run out of bread, then they turn to investors, usually trying to get investors to put money in. But another handling for that is they go to one of these gold royalty companies. The gold royalty company then does an assessment of the mine, of the management, how well it's organized, the whole situation. What's the political environment of the mine? I mean, some of these things are in kind of shaky political environments that may be a factor. But primarily, they look at the statistics of the mine. They know how to read these geology reports upside down, inside out, and backwards. And then they will lend the mining company. I don't know if they call them loans, so I said they lend them, but they provide to the mining company money, and in return, the mining company gives them a royalty on the revenue from the gold that's produced. So that royalty varies. It could be 1%, 2, 3, 4, 5. It depends on what kind of agreement they reach. But there are companies set up and to do that, and that's all they do. And they go around looking for mines that they think are good. They do their own analysis, and then they provide money to that mine, and in return, they get a percent of the revenue. Now, understand, these guys know what they're doing. They're gold mining experts, and they're not going to provide funding for some mine that doesn't look promising. So you, as an investor, then have the opportunity to invest in the royalty company. So, and the royalty company typically has royalties coming in from gold mines, large and small, and there may be a few, there may be many. Some of these gold royalty companies have a lot of mines and a lot of royalties coming in. So this is a unique way to invest in a gold mine. One of the reasons that it's interesting is that the gold royalty company presumably knows what they're doing. I repeat, they're not going to lend their money unless they have done their due diligence. So, and these are experts doing a due diligence, and they're putting money in. You then get to ride on the back of their due diligence by investing in the gold mining, in the gold royalty company. So there are, several, I don't know how many, but lots of gold royalty companies. You can, in your search engine, you can put in gold royalty if you subscribe to any of the, precious metals, financial newsletters, in addition to Strategic Financial Intelligence. He hastens to add strategicfinancialintelligence.com, and determine what gold royalty company you want to invest in So this, instead of investing, trying to find a mine yourself, you can jump on the back of one of these gold royalty companies and ride the revenue streams that they're getting from the gold mines that they've invested in. It's a great way to invest. I'll give you a couple of examples of companies that are doing this and that might be good investment prospects for you when we come back. I'm John Truman Wolfe. This is the John Truman Wolfe Financial Hour, and we're coming back.
How would you like to save up to $500 on your next vacation package? Any vacation package anywhere in the world. Just call Superior Travel and mention the code RADIO and save up to $500. We'll design a custom, fantastic vacation just for you with all the bells and whistles. Not some cookie-cutter vacation, but a unique, all-included vacation customized by one of our exclusive travel experts. And our service is completely free. You pay nothing more. So why waste your time? Let us do it for you. We've got over 100 years of travel experience to help create the perfect trip for you. Call now and learn how to save up to $500 on your next custom vacation. Pick up the phone, call Superior Travel, and use the code word RADIO.
800-570-9631. 800-570-9631. That's 800-570-9631.
If Ernest Hemingway was alive today, would he say this to you?
Shakespeare, Mark Twain, Edgar Allan Poe, all great writers. And after reading your book, I simply must add you to the list.
Wait, you don't have a book yet. So make a free call to Page Publishing. Their expert staff can help you turn your book idea into a real book, a masterpiece that could someday make the bestseller list in hard copy and digitally all across the world. Page Publishing can help you completely take your idea for a book, write it, and publish it. So if you want to join the ranks of some of the most famous authors in the world, call now for a free information kit. Turn your book idea into publishing gold. Make a free call right now to Page Publishing.
800-378-3212. 800-378-3212. 800-378-3212. That's 800-378-3212.
All right, folks, we're back. I'm John Truman Wolfe. This is the John Truman Wolfe Financial Hour. Talking before the break about gold royalty companies, a way to invest in gold mines by riding on the back of the expertise of companies that lend money to miners and gold mines. And they then get the gold mining company, the gold royalty company, then gets royalties from the gold mine. So it has a constant stream of income coming from the gold mines, mining and selling of gold, and you have an interest in the gold royalty company, and there are several of these things. I'm a fan of a little company based out of Canada, and it's called EMX. So it's a gold royalty company, stock selling, I think, on the U.S. exchange for about $2.77, I think. There are many of these. I happen to like this one for various reasons: good management and good eyeballs. So, if you want to stick your toe into the gold royalty world, EMX is one that you might want to check out. I think it's emx.com, most likely. So check it out. Another way you can do this, and by this I mean invest in gold mines without you having to do the due diligence on the gold mine yourself, is you can invest in an ETF. an exchange traded fund. These are, it's not really too dissimilar from the gold royalty company model. But these are an ETF, for those of you that aren't familiar with them, exchange traded funds. That's a company that then invests in the stock. They own the stock of various gold mines. And so you can benefit in that way. In other words, they have done their due diligence. They've bought the stock of the gold mining company. You're then buying their stock. So, and these things are rated online and in different places. There's all kinds of places that rate these companies. So a gold ETF means that the management has done their due diligence. They have looked around for the best gold mines, and then they have invested their money in that stock, and they have a portfolio then of securities of gold mines that they like, that they feel have performed or will continue to perform well. And you, in turn, are invested in that company, which owns a bunch of gold mines, stock in a bunch of gold mines. So those are two ways you can approach the precious metals market, particularly gold mines, without you having to do the due diligence yourself. If you're a geologist, and or you have other ways to make those assessments, more power to you. But in these cases, I'm repeating myself, but it's an important point. The management of these companies, whether it's been a gold royalty company, like this little company EMX, or a ETF, gold ETF, you get to write on the back of the expertise of these folks. I don't have a gold ETF to recommend to you in this show, but I will be doing research, and I will be making recommendations in strategic financial intelligence, strategicfinancialintelligence.com. And many of these things, the cost is modest. So you can stick your toe in that water, $500, $1,000, if you're being cautious and have a modest amount of money, or of course you can put in lots of money. It really depends on your own situation, and to the degree necessary and needful, check with your own financial advisor. As I said at the top of the show, the precious metals markets have taken a hit here in the last few days. I think it's a buying opportunity. I think precious metals remain in a long-term bull market. And with gold at 1867 today, silver at 22, whatever I said it was, $22 and change. This is a buying opportunity, folks. If you're one who was waiting for gold and silver to settle back, to shake out, they've done so. Will they go down more? I don't think so. I don't have a crystal ball, so that is just that. And $4 will get you a latte at Starbucks, if Starbucks is open these days. But I think this is a good way for those of you, and there are many of you, I know, listeners and readers of Strategic Financial Intelligence, that are very interested in precious metals. I think I would use bullion first. I would buy bullion first, gold coins, silver coins, bullion coins. But you can add to your precious metals strategy by doing a gold royalty investment and or a gold ETF. All right, we will be back after these messages for a final wrap-up and a look at cryptocurrencies today. Stay with us.
Here's important new information from the Diabetes Solution Center for you, a family member, or a loved one suffering with diabetes. If you have lost your provider, or if you need a provider for diabetic supplies, you may qualify to receive your diabetic testing supplies now with little or no out-of-pocket cost, regardless of your age. All you need is Medicare or private insurance to be potentially eligible. Call the Diabetes Solution Center right now for details. Just takes a couple of minutes. Our friendly, knowledgeable agents will give you free, no-obligation information, handle all the insurance paperwork, and make sure your supplies are delivered directly to your door for free.
Call U.S. Medical Supply 24 hours a day. 888-912-1332. 888-912-1332. 888-912-1332. Call right now. 888-912-1332.
For the getaway of your dreams, come to Hawaii's Playground, Ka'anapali Beach Resort, on the fun side of Maui, where the world comes to play. Find your spot on Ka'anapali Beach with 3 miles of white sand, 12 resort properties, 2 golf courses, and 2 shopping centers. Enjoy the playground of Hawaii's ancient royalty. Ka'anapali Beach Resort is Hawaii's original master plan destination resort and home of the Hawaii Food and Wine Festival. With views of 2 neighboring islands, you can breathe in the land's natural beauty from your favorite resort or golf fairway. Come experience Ka'anapali's own special brand of Hawaiian hospitality with world-class dining, relaxing resorts, water sports, and activities of every kind. For romantic, family, and great friend getaways, discover the options of Ka'anapali Beach Resort, where the world comes to play. Plan your getaway today. Visit Ka'anapaliResort.com. That's KAANAPALI Resort.com. Question: have you ever thought about making an investment in California real estate for the high returns available through trust deeds? As a trusted professional broker, Sun Pacific Mortgage and Real Estate has been helping investors earn high-yield returns on safer investments for over 32 years. Their trust deeds earn upwards of 13%. That's right, 13%. They invest in notes starting from $100,000 throughout all of California, where real estate remains strong. If you want to know more about high return investments through available deeds of trust, go to their website at sunpacificmortgage.com. That's sunpacificmortgage.com, or call them today at 707-523-2099. 707-523-2099. sunpacificmortgage.com, or call them at 707-523-2099.
All right, folks, we're back. I'm John Truman Wolfe. This is the John Truman Wolfe Financial Hour. We have our final segment here. Let me start it by encouraging listeners to subscribe to Strategic Financial Intelligence, strategicfinancialintelligence.com. We make investment recommendations in there and cover particular areas of investing in depth. Once a month, the newsletter comes out once a month, and then weekly, a transcript of the radio show is sent to subscribers. So there are weekly updates and then a monthly newsletter. This month's, by the way, this month's newsletter, which I'm just wrapping up, probably be published in the next few days here, is on investing in lithium. A fantastic subject. It's a whole new, I say new area of investing. I mean, there are large lithium corporations, mining corporations that have been around for some time and supplied the lithium market. But as a major investment sector, I think it's fair to say it's new, or it has taken on a new life. Why? Because electric vehicles need lithium for their batteries, and more attention has been brought to this just PR-wise by Elon Musk and the Tesla. We talked, I think, a couple of weeks ago about a lithium mining company, Piedmont, that had just signed a deal with Tesla And the stock had been trading at around, I think, around $6.50. And in a day, it went up 4 or 5 times, just boom. There are other, obviously, lithium companies. There are big three. There are 3 big, we can say giant corporations. I don't know why I call them giants. The 3 large lithium companies. I'm going to cover those in the newsletter. And then there are smaller ones that are just peeking their head up, and they mine like you mine for gold. Well, there's actually 2 ways lithium is produced. One is it comes from brine, basically salty water, and the other is there are lithium mines, and there are some great lithium mines in Canada, which has not been the traditional country of origin of lithium. It's been Argentina and Chile where they have these mines. But the Canadian companies, and I'm going to provide an in-depth recommendation in this month's newsletter. It's inexpensive, and they've got great management, and they've got a lithium mine there. And the demand, I repeat, the demand for lithium, if you look at all the projections, are basically straight up. Because not only is the U.S. turning to electric vehicles, and in the newsletter I document all the different automobile manufacturers and their focus on electric vehicles. The commitment to EVs is going up and up and up, and with it, both in the U.S. and in China and in India, is going straight up. So lithium is a hot investment area. I cover it in some depth in this month's issue of Strategic Financial Intelligence. If you want to know what my recommendation is in terms of investing in lithium, go to strategicfinancialintelligence.com and sign up. Hope to see you there. And I hope to see you next Thursday when the John Truman Wolfe Financial Hour will be back. Have a great weekend, folks. See you next week.